Mark Zuckerberg's $29 billion wealth plunge, inside Meta's record stock drop. In a tumultuous day for tech mogul Mark Zuckerberg, Meta Platforms Inc., formerly Facebook, saw its shares plummet by a staggering 26%, marking the largest single-day drop in market value ever recorded by a U.S. company. This unprecedented decline erased over $200 billion from Meta's market capitalization, triggering a cascade of financial repercussions that reverberated globally. At the center of this financial maelstrom was Zuckerberg himself, whose personal net worth took a monumental hit, plummeting by $29 billion in just 24 hours. Today, we dive into the staggering $29 billion loss that shook Mark Zuckerberg and Meta Platforms Inc. Stay tuned as we unravel the highs, lows, and everything in between of this unprecedented financial roller coaster. Number 1. Stock plunge. On a fateful day for Meta Platforms Inc., formerly known as Facebook, the company experienced a catastrophic 26% plunge in its stock value, marking one of the most severe single-day declines in recent market history. This drastic drop obliterated over $200 billion from Meta's market capitalization, catapulting it into the annals of infamous market disasters. The precipitous decline in Meta's stock price can be attributed to a confluence of factors, chief among them being the company's disappointing financial performance. Investors, who had eagerly anticipated robust earnings, were instead met with figures that fell short of expectations. This shortfall in earnings and revenue sent shockwaves through the market, triggering a wave of panic selling as shareholders scrambled to cut their losses. Additionally, broader market conditions exacerbated Meta's woes. Heightened investor concerns over regulatory scrutiny, particularly regarding data privacy and antitrust issues, cast a shadow over the company's future prospects. Such uncertainties often prompt investors to adopt a risk-averse stance, swiftly offloading shares in companies perceived as vulnerable to regulatory pressures. Furthermore, the rapid decline in Meta's stock price underscores the inherent volatility of tech stocks, which can soar to dizzying heights during periods of optimism, but plunge precipitously during downturns. For Meta's founder and CEO, Mark Zuckerberg, the repercussions were profound. With a significant portion of his personal wealth tied to Meta's stock, Zuckerberg saw his net worth diminish by a staggering $29 billion in a single day, underscoring the immense personal stakes at play in the corporate world. Number 2. Ownership stake. Mark Zuckerberg's financial fate is intricately tied to Meta Platforms Inc., where he holds a significant ownership stake of approximately 12.8%. This sizable portion of the company's shares means that fluctuations in Meta's stock price have a direct and substantial impact on Zuckerberg's personal wealth. When Meta's stock price plummeted by 26% in a single day, Zuckerberg's holdings in the company suffered a proportional decline in value. Prior to the market downturn, his stake in Meta was valued at a substantial sum, reflecting his pivotal role as both founder and CEO. However, the sharp and sudden drop in the stock's valuation resulted in a significant erosion of Zuckerberg's net worth, amounting to a staggering $29 billion loss over the course of just one trading session. The swift and severe nature of this decline underscores the volatility inherent in tech stocks, particularly for companies like Meta that are subject to intense scrutiny and investor expectations. As one of the largest shareholders, Zuckerberg's wealth is particularly vulnerable to such market fluctuations, highlighting the risks inherent in owning a substantial portion of a publicly traded company. Moreover, Zuckerberg's personal fortune is not only influenced by market sentiment, but also by broader corporate strategies and external factors impacting Meta's performance. Regulatory challenges, competitive pressures, and shifts in consumer behavior can all contribute to the fluctuating fortunes of tech giants like Meta, amplifying the financial stakes for major shareholders like Zuckerberg. Number 3. Impact on net worth. Mark Zuckerberg's net worth took a staggering hit as Meta Platforms Inc., the company he founded and leads as CEO, suffered a monumental 26% drop in its stock price in a single day. Before this unprecedented plunge, Zuckerberg's wealth was deeply intertwined with the value of his significant holdings in Meta. With an ownership stake of approximately 12.8%, His personal fortunes were largely dictated by the performance of Meta's shares on the stock market. Prior to the downturn, Zuckerberg's net worth was estimated at $114 billion, primarily driven by the substantial value of his shares in Meta. However, the sharp decline in Meta's stock price swiftly eroded this wealth, resulting in a jaw-dropping loss of $29 billion in just one trading session. This dramatic decrease highlights the immense financial impact that sudden market shifts can have on the fortunes of tech billionaires and major shareholders. The rapid devaluation of Zuckerberg's holdings underscores the volatility inherent in tech stocks, which can experience extreme price swings driven by investor sentiment, corporate performance, and broader market conditions. For Zuckerberg, whose personal wealth is closely tied to his company's success, such fluctuations magnify the risks associated with owning a substantial portion of a publicly traded entity. Moreover, the implications extend beyond personal finances to corporate governance and investor confidence. As Meta's largest shareholder, Zuckerberg's wealth and leadership are integral to the company's trajectory and ability to navigate challenges effectively.
Number 4. Market reaction. The dramatic 26% plunge in Meta Platforms, Inc. stock price reflects a seismic shift in investor sentiment and has profound implications for major shareholders such as Mark Zuckerberg. This sharp decline not only signals market volatility, but also translates directly into substantial financial losses for shareholders who have significant stakes in the company. For Zuckerberg, whose personal wealth is intricately linked to the value of Meta's shares, the $29 billion reduction in net worth underscores the vulnerability of tech billionaires to sudden market downturns. Such market reactions highlight the intense scrutiny and pressure faced by tech industry leaders, whose fortunes can rise or fall dramatically based on investor confidence and corporate performance in a highly competitive and rapidly evolving market landscape. Number 5. Potential for recovery. Despite the significant loss in wealth experienced by Mark Zuckerberg due to Meta Platforms, Inc.'s sharp stock decline, there remains potential for recovery in the company's share price. The volatility inherent in tech stocks suggests that Meta's valuation could rebound in the future, driven by factors such as improved financial performance, strategic initiatives, or favorable market conditions. For investors, including major shareholders like Zuckerberg, this volatility represents both risk and opportunity. While sudden downturns can lead to substantial losses, they also create potential for significant gains when market sentiment shifts positively. In the case of Meta, the influence of its high-profile founder and ongoing innovations in technology could contribute to renewed investor confidence over time. Navigating such fluctuations requires a keen understanding of market dynamics and a long-term perspective on investment strategies, especially in the dynamic and competitive landscape of the tech industry. In conclusion, Mark Zuckerberg's $29 billion loss in net worth amid Meta Platforms, Inc.'s stock plunge serves as a stark reminder of the volatility inherent in the tech sector. While the immediate impact on Zuckerberg's wealth is substantial, the potential for Meta's share price to recover underscores the unpredictable nature of stock markets. Thanks for watching. Today we explored how Mark Zuckerberg lost a staggering $29 billion in net worth in just one day, driven by a record plunge in Meta Platforms, Inc.'s stock price. This highlights the volatility of tech stocks and the direct impact on the personal wealth of industry leaders. If you found this video informative, don't forget to like, comment, and subscribe for more updates on business news and financial insights. Stay tuned for our next video.